in investments and the biggest non-bank distributor of mutual funds here in the Philippines. He was also the previous senior advisor to the AIA Group, CEO for marketing and distribution. He also sits as a director of Globe Telecom, the Freeport area of Bataan, Esquire Financing Incorporated, the Culinan Group, Technomarine Philippines, and the Seven Tall Trees Events Company Incorporated. Let us all welcome a registered financial planner and a four-time member of the Million Dollar Table, Mr. Rex Mendoza.
Good morning. That's not the way we greet each other when we're in this industry, right? This is financial services. Good morning!
Good morning!
That's more like it. The biggest problem I have today is not my topic. Biggest problem is that they gave me 30 minutes. If many people in this group know me, 30 minutes will be short for my introduction, right? So let me go on with this. The topic that was given to me by my friend Henry Ong, if I can have the slides there, is wealth management strategies for the high net worth market. I've had a lot of dealings with high net worth, going back to the time I've been an agent. I think you know I was an agent in the past. I also moved on to become CEO of Pelham Asset Management. There were a lot of high net worth clients there as well. When I moved on to Ayala Land for our premier line, and even in the other brands, because the investors for the other brands are also high net worth. They don't live in those houses and condos, but they invest in those. And lastly, as CEO of Pelham and even for AIA, I've had a lot of dealings with these people. So first, considerations. I think I moved too much. Key considerations first. Not all high net worth clients are sophisticated investors. Would you agree with that?
Yes.
See, many of us think that because they're high net worth, they understand many things about our industry, about our products, and you know that's not true. There are a lot of high net worth individuals who made their wealth from land, from their own businesses, dealing with their own professions, without knowing a lot about financial services and financial products. There are high net worth who've learned the process, who've learned all of these other vehicles, and it's good because they began to understand. But when we deal with them, let us not think that we can put them in a basic group that says, you know, they're high net worth, so they should be sophisticated. They're not. High net worth individuals and families have unique needs, objectives, and priorities. While we look at high net worth to be specific and unique because of what they have, they still are individuals, they still are families, they have different needs. Many of us actually put them all together and say, okay, they're high net worth, so they should be doing this. They should be wanting this. They should be liking or demanding this. Not true. First thing you have to do is really talk to them. My big example here was when I was doing marketing and sales for Ayala Land, and we have an event every year that we hold for high net worth clients. And we call it a VIP appreciation night. And quite frankly, when I was new, I looked at all of them, and they don't seem like they're high net worth to me. You know, we had all of these, operas, stage plays, really nice events, culinary events. But they don't seem like they're high net worth. So when I talked to some of them, true enough, they were secretaries of the bosses, they were friends, but the high net worth guy wasn't there. So when we had a chance to do our research, primary research, we asked them, what do you appreciate for us to do about it? Having this relationship with you. What do you want? You know what they said? You know, Rex, you spend a lot of these things. We don't go to these events. We'd rather give those tickets to people who want to be there. For us, it's not just it's a waste of time, it's just that we'd rather have that in our own time, in our own schedule. So what do you want? You know what I wanted? Every launch that you have, let us be the first to choose. So it was a good idea for a priority selling event. So every time we launch, before we launch the project to the public, we have a priority selling event. Guess what happened? We don't have to spend too much on sales and marketing anymore because before the launch date happens, we've already sold 50 to 60% of whatever we're selling. For a Brio in New Valley, that's the highest end subdivision enclave in New Valley, that got fully sold out in 2 hours. Because that's what they want. And what they want is sales for me. So why won't I give that to them? Right? You don't even have to spend anything. Why? Because they don't want to even eat the food you serve. They just want to go there, choose what they like, and go. So basically, they have their own needs. There are relevant issues and concerns that concern them as a group, and that's real. I'll talk to you more of them about it later on. But it's a must to understand that these guys are coming from a very, very different perspective. But I guess I should have started with this question. How many of you serve high net worth clients? Raise your hands. High net worth clients? A few hands. How many of you want to have high net worth clients?
More.
See, that's about 10 times the hands that I saw earlier, right? This is the clincher question. How many of you are high net worth?
Oh, wala.
You see this. There becomes a perspective issue, and that's very clear from the onset, right? See, sometimes we have our own perspective clouding our own way of thinking in dealing with this group. And you have to realize you're not like them. And they're not like you. And to be able to strike a really, really good relationship, you have to understand them and adjust to them. Is that correct?
Yes.
Do you agree with that? And that's the reason why I tell you, many of us sometimes deal with all of these ideas, and sometimes I get to see and pick up lines, and I say, oops. Let me tell you, I've seen many people in this room say, you know what? The real wealthy does not have much. True wealth comes to people who have lesser needs. That's true, right? That's nice to read in a book, right? But I'll tell you, that's the reason why you're middle class. That's the reason why you're middle class. See, real wealthy people don't have needs, material things driving their wealth. There are some who do, but most of them that we've encountered in all of the researches we've done on this topic, most of them are simply driven by fulfilling their potential, wanting to achieve something, and money is just a scoreboard. Do you agree?
Yeah.
So they make more money. Not because they need money for a flashy new car or for a big, big home. No, they just make more money. And they have fun making more money. Henry C., to this very day, still inspects shoes. In fact, the team doesn't want him to do it because his taste has actually been like decades dated, right? But he still does. He still wants to do what he does best. So clearly with this group, ladies and gentlemen, let's realize they have a different mindset. For many of them, money is just a scoreboard. And money is not there to be able to spend. You know, I don't know if you've read this latest article on Warren Buffett, right? A guy who has like over 60 billion US dollars, driving the same car, and again, driving. You know, he doesn't even have a driver. How old is he? Lives in the same house that he bought for 30,000 US dollars 3 decades ago. See, many of us would say, you know what, if I had that $60 billion, I would do this. I will own that. Correct? Kaya ako walang 60 billion. Ganyan ka mag-isip eh. Diba? So iba sila mag-isip. We will have to make sure that we understand this first. These are key considerations in dealing with this market. I will show you, this is a slide that I borrowed from my good friend Jeff Gonzalez. He's pushing this slide to make people realize, you see, it's still the most popular instrument in the country, 8.47 trillion. It's a misconception about safety because they say it's covered by PDIC. We put the numbers that are not covered by PDIC. 500,000 and up accounts with over 500,000 and up, which are not covered by PDIC. And it's, how much? 7.4 trillion. So if high net worth individuals have all the acumen and the savvy, then the money won't be here, right? I just saw this, Phil Stocks, I don't know them, they haven't paid me. But you see the rates of return that they show here? And how come time deposit, this is actually dated, it's 1.25, it's less than 1% today, right? But it's still there. The money is still there. So we, as a group in this room, still have a lot to teach even the high net worth clients of this country. I'll tell you, there are many reasons why they keep it in the bank. It's not simply safety. One of our biggest high net worth clients, I asked, ma'am, why are you keeping it in a time deposit? There are mutual funds, there are stocks, there are other vehicles. You know what the reason was? Mahal na mahal ako ng branch manager ko eh. Am I correct? Is that true? This is what you get as responses. It's a relationship that's based on trust. And trust, you don't overcome by simply pushing yields. Trust can never be overcome by yields. And for that reason, many of us, and quite unfortunately, this has been seen in many of the bank assurance sales that have been happening, we get to sell products in the wrong way. We sell pushing on yields, twisting on the greed side of it. And we shouldn't do that. We should make them appreciate it. So what do they really want? Okay, this is the result of a primary research done by a private bank that's operating in this country. And when I say operating in this country, by far no means legal. They fly people, they stay in the Horizon Club of Shangri-La, certain rooms at the Manila Pen, and they go out holding an attaché case full of checks and instruction for money movements. And they can move billions of dollars on a monthly basis. They came up with a research on all of these guys, and this was what came out. High net worth clients are focused on maintaining a lifestyle after retirement. They really want to hang their gloves, give the whole business to their kids. But they want to know, am I going to continue my lifestyle in my retirement? So can you imagine that? People that have huge money still thinking about, can I maintain this lifestyle? They're still insecure. It's unlike the middle class who would think, if I had that, I would have bought this. These guys still feel that they don't have enough. College education funding. Many of them have actually money enough for MBA school anywhere in the world for their children. But they want the funding to be secure. They want it separate from their own business coffers. See, the high net worth in the Philippines is unique. Unlike many countries where you have all of these businesses really registered and clearly separated from family, would you agree? Corporations in the Philippines held by high net worth clients have checking accounts that are issued by the boss as if it were a personal checking account. Is that right? That is true. In many countries, when you're in Hong Kong, you have to have a separate checking account for your company and a separate checking account on the personal side. In the Philippines, it's almost like a blur, right? And that's the reason why you will see. And, we have problems in some of our insurance companies because compliance-wise, they don't allow us to get checks that are in the name of corporations anymore. Is that true? That has become a compliance issue, even in real estate. However, somehow we're not understanding the way these guys do business. For them, it's a personal account, even if it's company, because the other signatory is the wife. Right? See, in many companies, I see that. And I have friends who tell me, you know what, Rex? The signatory to our corporation is my wife and me. But you know what happens? He gives me, or she gives me a checkbook, a whole checkbook that I need to sign already. So what does that mean? She's the only signatory. Right? Because you've given authority to anything she wants to spend on. That's dangerous. But they do that because it's an extension of family. Okay? Protect current level of wealth. They want security. They want the peace of mind that whatever they have achieved, they can maintain. Aggressively grow wealth. So, essentially, when you sell on greed, it's difficult because there is loss aversion in our high net worth market in the Philippines. There is loss aversion. They'd rather not lose first before you tell them to earn more. And that's the reason why you have to give them a firm platform that secures safety before you're able to pull their money from the bank. Leave an estate for their heirs, 9.8%. Many of them are thinking about charitable giving now. Many of them are thinking about charitable giving. 7, minimize income and capital gains taxes. Their issues are about leakages. They want cash flows to move very well in their households and in their business. And lastly, they want to better manage risk. So out of all those 9 needs, what the people in this room would probably have to offer in terms of acumen, expertise, have to address all of those 9 points in a level of priority that's going to be unique per person, per family, and per business. So, what are the strategies now? Obviously, because they have more, we have to give them portfolio diversification. You learn that from anywhere, right? They always say, at a certain level, you have to be diversified. But in high net worth, the diversification is actually more comprehensive. Not only are we talking about appreciation of product diversification, so they have to have, back deposits, they have to have maybe UITFs, mutual funds, stock portfolios, they have to have life insurance, all of these things. And it's your job to put all of that together. Because for most of our high net worth, they don't even have it in one page. They deal with separate people depending on who faces them, and no one consolidates it. Time and again, many of our roles and responsibilities has to be focused on reviews. How many of you do reviews for your high net worth individuals? Now, for those people who raise their hands, will you agree with me on this point? Even if you're doing reviews for them, do you have this queer idea that they don't even tell you everything?
Yes.
They don't. And that's the reason why we have to have training for probing. See, many insurance companies tell their agents this, you know what? Let's not talk too much. Let's not present too much. Let's probe. Am I correct? Did they teach you how to ask questions? See, that's a missing link, right? They ask you to probe, but they don't teach you how to ask it. So what do? Sir, what's your age? Sir, where do you live? Where do you work? Questions like, you're a TV reporter, right? And you're getting a lot of information that doesn't help them. They only help you. And I've heard the agents say this, like, sir, would you have an idea, or can you give me an idea about your annual income? Wow. Misis ko nga, hindi alam, ikaw pa, sasabihan ko. Diba? So, when you do questioning, you have to have the skills to, somehow ask them, percentage of their income that goes to education, percentage of income that goes into transportation expenses. So, you can actually deflect, and in the 10th question say, out of that, percentage of what? And then you can make your computation as to the annual income, right? It's a roundabout way of doing it, but you have to do it. But still, in terms of diversification, you have to expand that with markets and geography. Many high net worth clients have had banking relationships in Hong Kong and in Singapore because of the relative nature and safety of these markets today, and because you have branches of Swiss banks in Hong Kong and Singapore. In real high net worth, they have to be able to make a withdrawal when they're in Europe, when they're in anywhere in Asia, or in the mainland US. If you don't have that access, make sure you have partners who have that access. See, as financial advisors, you have to point that family or person to someone who can do something about it. Or else, you will lose them. You never let a mistress come in, right? you allow a mistress to come in. There's a difference between a threesome, okay, and something that has not been prior approved. Because if you're there and you can connect them to these people, they will always go through you. There are currency diversifications as well. So they can be in euro, part of their money will be in dollars, part of their money will be in yen, depending on the situation. But mindset-wise, perspective-wise, still, minimum 30% in different currencies. Custodian and domicile, as I've mentioned, many of these private banks are in different domiciles because you want your money to really be spread. If everything is in Manila, we will have an issue. High net worth always want diversification, and including that issue about domicile, you can link up to other people who have access to different markets. Asset allocation is key. Asset allocation is what goes to what, right? Actually, yields would be secondary. Asset allocation is the first and by far the most important part of your job. What goes to what and in what percentage. Second, control of leakages. What's exposed to tax? You know, this is already low and they pay 20% withholding taxes, right? You know, I was just sitting there, I was listening to a conversation and I heard things like, you know, the rich actually get richer and the poor get actually poorer. But can we blame them? Can we blame them? See? So my point is, we can't blame them, so we have to learn about what they do. So if you can minimize leakages, they can earn and accumulate more. And sometimes it hits you, right? You pay capital gains tax on a real property that you're about to sell, 6%. You pay 20% withholding on a time deposit, right? George T. owns Metrobank. In the last 5 years, if your 100,000 would be in Metrobank shares, you would now be 400,000 richer. If your 100,000 is in a Metrobank time deposit, you will have 110,000. Right? 110,000 that will still have to be exposed to capital gains taxes. George T. will not have to pay taxes in the stocks that are lodged in Metrobank, right? And if he wants to sell out and get his 100,000 investment out, how much does he pay? 0.5. So the rich pays how much? 40 times less. The poor pays 40 times more. Can you blame them? They know what to do. We have to teach the others. Risk calibration and protection planning. You know, for the guys in this room, there is a big, big challenge for high net worth. Because the high net worth individuals can actually go to Hong Kong, borrow the premium of their life insurance, single pay, and be covered for life. So what's their premium? It's the interest on the premium. It's not the premium, it's the interest on the premium. Because they borrowed the single premium. And when will they pay the loan? When they die. When they die, the proceeds of the loan are first used to settle the premiums unpaid. And the residual goes to the family. So it's actually free insurance or interest-driven insurance. And private bankers in Hong Kong and Singapore actually invite them to fly to Hong Kong and Singapore. Free ticket, free medical exam, and a good lunch in a great hotel, right? They are sold insurance. Kind of way we cannot sell them here. This is by far one of the most important, guys. Transition from wealth creation to wealth impact. They're already high net worth. While many of them would like to grow their worth really in more aggressive amounts, you have to shift your discussion at times to the impact on wealth rather than growing wealth. What's the difference in the family? From the individual to couples and then to children. And we have to talk about family generations. In fact, for many of our high net worth clients, we have to talk about family constitutions, how decisions are made on money. how decisions will be made on the business. And there are examples about the way these things are done. And obviously, the money do them a lot better, right? Because they have a ton of advisors to make them, to advise them on how they do these things. There are no boardroom battles in Ayala. Would you ever think of one? There are none. There is a family constitution. They know how to move forward. And lastly, legacy and charitable giving. How do they transfer the wealth? Not just to people they love and care for, but to the others who care more. The others who probably don't have more. So, thinking about all of these things, let's put things in perspective. In this industry, we talk about 3 stages of life, and we tell people, you move from man and money at work, to money at work, so you can really retire rich and enjoy the twilight years of your life. We teach them this. Actually, ladies and gentlemen, in the true sense of high net worth, this is just one stage. I've been talking about this in my entire career in financial services. What I realized when I got out of it is the fact that that's just focus on financial preparation. Financial preparation gives people the funds to live on. What I realize today, in the work I do today, because I do international work, and I'm doing consulting work for many of the private banks and other institutions in the Philippines who'd like to go out, I focus on high net worth wanting not this, but the psychological preparation or having the fund to live for. After you have the funds to live on, you need to know what's going to get you out of bed, what's going to make your life important or sensible or worthwhile living. It's the fund to live for. You have to decide that now. You have to be able to help your high net worth clients prepare for what they want to do after making the money. And there are new stages now, where the 3 stages I showed you earlier is just one stage. It's prospering yourself, then you move on and graduate to prospering others. After the high net worth becomes high net worth, they want to help others and prosper others. And lastly, you go on to legacy, building a significance, and glorifying your Creator. These are the new stages. And if you can help out your high net worth clients in transitioning, you won't have a high net worth client. You will have a high net worth client for generations. And that's what we all want, isn't it? In the end, one advice I give to all my clients, which never goes wrong, is the fact that they have to anchor everything on what truly matters. Making the money, getting the wealth, isn't going to amount to anything, because wealth is but a tool. You want to be happy. And in the end, if real happiness is something that has to be defined for you, it has to be wealth and everything that you own dearly to be shared with people close to your heart. I hope my 30 minutes was worthwhile enough for all of you. Thank you so much. Good morning.
Thank you so much, Mr. Mendoza, for that awesome presentation.